Hello, everyone. Welcome back to our daily series dedicated to price action based technical analysis. Well, I'm so excited to be with you here this morning as we plan to take another fresh new look at the financial market in anticipation of the New York session today. But before we begin the session, let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi, and thank you very much as you do so. So I look forward to your comments and feedbacks, please, while I load up my comment box. Thank you very much as you do so. All right, so I can see a handful of comments right here. Thank you very much, everyone. From Queen Wild to Avishek, and then I can see Ranjit 786. Hello, Carrie. Thank you very much. And Aki 88, thank you very much. Hey, Steamroller, trust you are doing very well. Thank you, very, very much. Yes, thanks for that comment, Steamroller. I really appreciate that. All right, so with the handful of information we have here, I would like to take this as a confirmation that we are good to go this morning. And it's on this note, I welcome you all to yet another promising edition on the X Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be delving into the current market condition using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session. Well, so far this week, we have been monitoring four major financial instruments, which includes the US All Spot, the USTech100, the GBPUSD, and finally the XAUUSD, popularly known as the gold spot. And in the last 24 hours, we've seen quite an interesting situation in the market as we saw from nowhere how the US dollar gained a little bit of traction yesterday, giving us quite an interesting positions to capitalize on both the US Tech 100, the GBP USD, and of course the XAU USD. It's only the US All Spot that did not really do well for us yesterday, and in fact we are going to be looking at this asset today to see how well they did and how we intend to position ourselves for the next trading session. So with that being said, I also don't want to forget my newcomers in the house. For those of you who are joining us for the first time, I'm really excited and glad to have you around with us. And I'm very sure you will be wondering what this is all about. What is it that we are doing in this platform? Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York sessions. Now, the session usually kickstarts about 10 a.m. UTC, 11 a.m. West African time, depending on your time zone. And I do recommend that you stay tuned in so that you don't miss out on any of the valuable ideas we will be deliberating on today. Now, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage that you stay engaged right in the comment section. So with that being said, we will be diving right into the business, and as usual, the first asset we will be taking on this morning, oh, sorry. Before we go into the first asset, we are going to be diving into the economic calendar. This is our normal routine. We usually check onto the fundamental factors to see how well how the market participant will be anticipating today's fundamental events. Now, as usual, we check the fundamental the economic calendar, and we all know that on the economic calendar we usually identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Tuesday, December 5, we only have an high impactful event, all of which is coming in from the United States, and this is the ISM Services PMI. Now, for those of us who do not know what the ISM Services PMI or how important it is, well, this index is a key economic indicator that measures the performance and expectations of the service sector in the United States. Now, a higher than expected data typically signals economic expansion, hereby boosting market sentiment, while a lower than expected reading may indicate contraction and potentially dampening investors' confidence in the economy. Now, if we look at the previous data for the month of October, it came in at 51.8, and looking at what we have here for the consensus for the month of November, we have 52, which is a little bit higher than the previous data, and this gives us an insight into what economists are thinking about that sector, as they expect a little bit of expansion in that regard. So we are going to be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectation? But one important thing here is that as technical traders, we do know that the anticipation of this event alone usually affect the market sentiment, which obviously would reflect on the chart at price action. Now, what we want to do now is to go right into the chart, sniff the current market structure to identify potential trading setup that can give us insights and clues into what is likely going to be happening during the economic event. So as usual, the first asset we will be looking at this morning is going to be the US All Spot. Well, my chart usually takes quite a while before it loads up, especially the US All Spot. So while that loads up, I will just read through the comment section. I see your comment here, Maxim FR. Good morning to you. Debogo777 says is new here. Well, I'm so excited to have you around with us. So I hope that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And thank you very much, Carrie. Yes, Generous Bull is a scammer, and please do not believe whatever he says or whatever references he gives you there, as Extreme Speed is not liable or does not have any connection with him. Whatever he says is a scam. Generous Bull, please check him out. Anything he says, please don't pay attention to it. Thank you very much as you do so. So the first asset we will be looking at this morning is going to be the US All Spot, which wasn't an interesting position for us yesterday, as we had two losses on this asset based on our preparation for yesterday's trading session. Now, what is going on the US All Spot? What has really been happening behind the scene, and what is affecting the market sentiment since the week began? Well, if you look at this current structure as it is right now, you will see that trading activity has been stuck within a range since yesterday's trading session, that is between the $74 area and the $73 level, to emphasize the level of indecision in this market. And this, of course, led into two lost positions due to the choppy market conditions we saw here in the last 24 hours. And of course, oil prices faced some selling pressures during the Asian session, as well as investors expressed concerns about oil demand and uncertainty regarding the extent and duration of OPEC plus supply cuts. Now, moving forward, market participants will closely watch the US ISM Services PMI scheduled for later today. We talked about this earlier, as this event could have a significant impact on a US dominated asset such as the US oil spot. So, in preparation for today's trading session, how do we intend to capitalize on any potential opportunities? Now, before we go into the details here, I would first of all like to take us through how the week started for us all here, what led to the decisions that we made during the New York session yesterday. And for the sake of those who are joining us for the first time, you have the privilege of being on the same page with us. Now, at the beginning of the week, right here on the 1 hour time frame, we did acknowledge our key level, which was situated around the $75 area. And for the fact that price remains below that key level, you know that we look out for patterns and structures that supports the idea of selling. Now, in addition to that key level was this range that we identified yesterday. So it was more of a strong bearish note at the beginning of the week, as price dropped from the $74.75 level, which appears to where price started the week, into the $73.50 level to give us a channel to work with. And one of the things we agreed here yesterday is that we shall wait for either the breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of that range to give us an opportunity to buy. And of course, during the early hours of the New York session, we had the privilege of joining a sell position which never lasted long, as we saw price move about 50 pips before taking us out in a loss on that position. Then we also had the privilege of having buy positions at the breakout of the structure with a buy stop order above that area, and we also got that level triggered. But unfortunately as well, price action dropped again to the downside, and this of course further emphasized the chopper situation, which reveals the level of uncertainty that is going on in this market. Now, it's okay if this kind of situation usually happens sometimes, and of course I just want to take succor. I want us all to take succor in the fact that the week is still very early, and we still have enough time to be able to recoup the loss we incurred, and of course make some more profits on top of it. Now, going into today's trading session, you will see that due to this situation, we would want to have a better perspective into what is going on the higher time frame, so we can have an holistic view, and of course allow those who are joining us for the first time to be on the same page with us. Now, we started our analysis for this week right here on the 4 hours time frame, and this was exactly what we saw here. Now, on the 4 hours time frame, we took into consideration the nature of price action since the midweek of October, and what we were able to find out here is that price action has been very, very bearish. Now, when we connected the series of lower highs, we had a descending trend line, which we said we will be using to guide our decisions going forward. In fact, we have a couple of trend lines here. We have this major one right here, and then the outer one right there, which is not that relevant at this point in time. So this one right here is the one we are going to be using. Now, besides this descending trend line, we had other levels that we identified here that we will be using to guide our decisions for this week. Now, one of the levels is the $79.60 area, which happens to be the resistance line, or let's say the highest point price action has been since the beginning of the month of November. Then we have the lowest point price action has been, which is at the $74.35 level, giving us a range further emphasizing the level of indecision going on in this particular market. Now, with the way things are going right now, prices caught within a range. We now went further to identify a key level within this range that we want to be using to guide our trading decisions for this week. Now, that range, that key level is situated along that psychological price level at the $75 area. Now, if you look at this level, you will see how it had played a major role in determining the direction of price action since the beginning of the month of November. Now, look at what happened here during the first week. We saw how the level was serving as a buying niche. As price got into this level, we saw how buyers took over the market. Then we saw the breakdown of the structure happen here. Price climbed back above the structure during the mid-month of November, and since price broke back above that level had been serving as a strong buying niche, as every attempt by the sellers to break through that structure was met with strong resistance from the buyers, as you will see here. And not until last week's trading session we finally saw a breakdown of that structure with an engulfing bearish candle. Now, with the information here, you would agree with me that the $75 area had played a major role in determining the direction of price action. Then another thing that makes this key level crucial and important is the fact that it also shares a beautiful confluence with that descending trend line right there. Now we saw the breakdown of both the 75 and the descending trend line right here last week Friday. Now the question we were asking ourselves at the beginning of the week on this asset is that how far will this breakdown go? Are we going to be waiting for some sort of retest of structure to incite a downtrend scenario, or will this platform around the $72.35 level, which has a memory for buying power, will hold sway to push price to the upside and begin another wave of bullish momentum? Now, with this information in mind and with this perspective, we decided to scale down into the lower time frame to see how market participant has been reacting to this current structure since the beginning of the week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, that is the reason why we got this range around the $74.75 level and the $73.50 level. But based on what happened in the last 24 hours, the range has widened a little further, as we now have the lowest point for this week sitting around the psychological level at the $73 area. Now, something interesting is going on in this market, as you will see here. Now, despite the strong bearish momentum from last week's trading session, we saw that as soon as price got into that zone between the $73 area and the $73.50 level, we begin to see how it becomes difficult for sellers to break through that area, hereby giving us situations where buyers were coming in to negate all attempt by the sellers to break through that structure. Now, this new development from a technical perspective is revealing a potential reversal pattern after taking into consideration the bearish impulsive move that got us into this point. However, we can't say we have a theoretical reversal pattern, but the formation we have here is more or less a sign that sellers are finding it difficult to drop down, and of course we are noticing some series of higher lows behind the scenes, which confirms that buyers may likely be gaining some momentum anytime soon. Now, when we identify reversal patterns like this on our charts, you know the next thing we do, we identify a neckline that we want to be using to validate if truly this reversal pattern is valid. Now, to identify the neckline, we had a level at that psychological area, had a $74 area, where I want to be seeing price break out of that key neckline at the $74 area, retest of structure to confirm this uptrend move. Now, another thing I will call our attention to, remember that descending trend line we identified on the 4 hours time frame. This is it right here, sharing a beautiful confluence with that $74 area. Now, if price breaks out of the 74, price will also break out of that descending trend line, which will be a beautiful sign that the trend line may no longer hold the capacity to continue to negate the bullish attempt, hereby welcoming buying opportunities. So I remain bullish above the $74 area for today's trading session. So let's mark that level out, which shares a confluence with the descending trend line. And if price action continues to climb up, then the breakout of both the $74.75 level and the $75 area, which is our key level for this week, will welcome more buying opportunities for today. So that is how we are going to be buying the US All Spot today. Anywhere above the $74 area, then we look out for more buying opportunities if price action continues to find higher highs. So in as much as we are looking out for buying opportunities, we also want to take into consideration the nature of sellers' potential too in this market. Of course, this market has been very bearish in the last 6 to 7 weeks, and all of a sudden we cannot just ignore the potentials the sellers also have. Now, what is it that we want to see on this chart that will make us feel comfortable selling or changing our bias from bullish to bearish? Well, since we have the lowest point where price action is for this week situated at the $73 area, I would rather want to see price break down and retest the structure for me to consider selling here. And if price action goes on to break down that $72.35 level, which happens to be the lowest point in recent times, that will definitely be confirming that sellers are likely going to be dictating the pace going forward. So this is the only condition for me to ever consider selling the US All Spot today. So if price does not drop below the 73 and it remains above this area, we hold on to a bullish bias. So let's see how the market will play out here. So I do hope you mark out these levels, as our center of focus for today's trading session will basically be between the $73 area and the $74 level, where depending on the direction of the breakout will give us clues into where price action will be going today. So I encourage us all to mark out this level. Let's see how it will play out. And if you have any questions whatsoever as regards to my explanations, or probably you need me to do some further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can take that time also to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see your comment here, Chuk098. You were trying to confirm if someone contacted you. Please, I would advise you to contact the customer support. They'll ask you some couple of questions to confirm this and get to validate the legitimacy of this contact you receive. So if you want to contact the contact center, please go to the home page of this app. At the top right hand side of your screen, you will see a logo with a head and a headset. Click on it and you will be directed to this customer support center for further clarifications. Please try and do that. Thank you. All right, so I see you, Laura63. Thank you very much. Steamroller, thank you very much, Steamroller, for these comments. I want to emphasize here, watch out for spam messages claiming to be affiliated with Extreme Speed. Please be cautious and don't fall for any suspicious links or offers or referrals whatsoever. Extreme Speed has no connections with these messages. Please. All right, so in the absence of no further questions, and with that being said, let's move on to the next asset on our watch list for today. Now, the next asset on our watch list is the USTech100, another phenomenal day we have here as we rode the bearish momentum all the way to the downside, scooping over 150 pips in that direction, as you will see right here. So let's run through how the week started for us and what led to the decisions we made at the beginning of this week. Now, during our live session yesterday, we acknowledged this range where price was initially confined within the 15,995 level and the 15,932 level to emphasize the uncertainty that was going on during the first 10 to 12 hours of the new week. Now, there is something we saw here during our live session yesterday, which I quickly acknowledged and said that we are not seeing price climbing up to break out of the resistance line, but instead price just broke down the support line of that range. And I said if selling pressure persists below the structure, we do want to be joining a decline to the downside. And I also emphasized how crucial that area is, a level that also shares a confluence with this ascending trend line that we said we will be using to guide our trading activities for yesterday's trading session. And you know how we use our ascending trend lines in this community. If price remains above the ascending trend line, we look out for buying opportunities, and if price breaks down the ascending trend line, we look out for selling opportunities. So in that regard, we sold the USTech100 around that area. And in fact, for those of us who missed out on that one, the market went on to break down our key level. Remember, we also decided to have a hodler below the 15,900 to maximize the potential of that bearish move. So you will have minimum of 2 positions running if you are taking advantage of those ones. And if you still have your sell positions running at this point in time, you will be having about 165 pips for the first position and about 140 pips on the second position. So approximately about 300 pips is running in profit right now, which is not bad at all for the start of the week. Now, with the situation we are witnessing right now, it is appropriate that we move all our stop losses and secure this current sell position. And if you will ask me, I will be suggesting that anywhere around the the 15,800 area will seem most appropriate to lock in or move all your stop losses to. Remember that we do want to give enough breathing space for price action to move around. So please move your stop losses around that area and let's have a well-secured positions. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue selling the USTech100, or are there chances that buyers will come into this market and change the momentum going forward? Well, first of all, I want to emphasize that we are looking forward to the ISM Services PMI from the United States Economic Docket, which is going to be playing a pivotal role in determining how participants in the market will be reacting to this data. And of course, we are beginning to see the anticipation of this event reflect on the chart as price action. So we are going to be taking some time to look at how the market is anticipating this event. Now, before we go into the details here on the 1 hour time frame, it is necessary that we take a look at what is going on the higher time frame to refresh our memories on what we saw at the beginning of this week. Now, at the beginning of the week, right on the 4 hours time frame, this was what we did here. In fact, we took into consideration the nature of price action since the last trading week of the month of October, and it was quite obvious that price action has been very, very bullish. And in fact, we connected a series of higher lows to give us a couple of ascending trend lines. Here we have the major one right here, and we have the temporary ascending trend line around this area to work with for this week's trading session. Then in addition to this ascending trend line was our key level situated at the 15,900 area. You will see how this key level had played a significant role in determining the direction of price action since the month of November. Look at how this level was a selling niche at this point before price action broke out of that structure during the midweek of November, and since then price action has been trading above that area, which further gave us a sign that buyers were negating all attempt by the sellers to break through. Last week we saw some significant move by sellers to break through, but it was met with strong resistance from the buyers, and not until yesterday's trading session, we finally saw the breakdown of both the ascending trend lines we identified earlier and our key level at the 1,900 to incite that selling opportunities. Once again, well done to everyone who took advantage of that opportunities. Now, as it is right now, we begin to notice some buy pressure resume following this impulsive move. And as it is right now, it appears that price is finding it difficult to break down the previous low, which may likely transition into a reversal pattern, maybe in the form of a retest of the ascending trend line that was broken to the downside yesterday to incite a downtrend continuation, or even break back above the ascending trend line to incite a bullish move. Now, the questions we are going to be asking going into the New York session today is to know if we are going to see buying opportunities here to incite an uptrend move, or probably we will see some bearish momentum to push price to the downside. Now, if you look at the structure, you will see that we have something to guide our trading decisions for today. So I'm seeing somewhere around the 15,740 and the 15,735. So let's use the most psychological level there. So we shall be using the 15,735. Let's use 15,000 or 15,740. Let me use 15,740. So it's a zone actually. So this is where our center of focus is going to be, 15,470 levels. So we do want to be marking out these levels on our chart. All right. And I would like this to also show up on the 1 hour time frame as well. Give me a moment. Okay, good. Now look at this level here. Look at how it had played a major role since the mid-month of November. It has been more of buying pressure. As you will see, sellers who have been finding it difficult to break through. We saw what happened here too. And yesterday we saw a little bit of breakdown, and immediately we saw bullish candle around that area. Now, in the last 4 hours now, we have been noticing some buy pressure around the 15,470. Now, will this buy pressure hold to incite maybe a move back into the key level, which will be dovetailing to a minimum of 140 pips to a maximum of about 200 pips to catch here if price moves in that direction? That's one scenario we will be looking at today. Or are we going to be having a downtrend continuation where the breakdown of this level the second time could incite a further decline to the downside. Now, let's scale down into the 1 hour time frame. We've had enough information needed on the higher time frame. So let's scale down to see how the market participants are going to be reacting to this new level that we will be using to guide our trading decisions for today. Now, price, we're still seeing buy pressure here. Then another thing I would like to call our attention to is the series of lower highs since the week. I think that's since last week Wednesday. You will see we have some lower highs here. So just trying to see how we can, I think we have something like this to work with. So we have a couple of trend lines here that we will be using to guide our decisions. So let me thicken this one a little bit, as it will be playing a major role for today. And of course, you know how we treat our descending trend lines in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, since the trend line here is going to play a major role and price still remains below that structure, we want to be looking out for more selling opportunities at the breakdown of the 15,470 to ride that momentum to the downside. So having a sell-stop order below the 15,470 will be welcoming more selling opportunities. However, if the buy pressure persists here, we might likely be seeing a situation that will lead into buying opportunities. And in fact, we have a level that will guide our decisions going forward, and that is around the 15,830 area. I think, yes, 15,835. 15,835 will do. So we have a resistant line there. So we label that one too as well, 15,835.00 level. Place it right at the top right hand side and look at what has been going on here since the later part of the New York session stroke the Asian session this morning. We can see price has been ranging between that structure, and from a technical standpoint, whenever we notice this, we know that there is a level of uncertainty, which of course we are not surprised at all, as participants are looking forward to the ISM services PMI, and this usually reflects on the chart as a choppy situation. So with the range we have here, we have no other choice than to exercise patience and wait to see how the market would react to this range to give us clues into what we will be doing. So if price action breaks out of the resistant line of this range, price would also have broken out of this descending trend line, and a breakout of the descending trend line would be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, a breakout, if we are lucky, retest of structure giving us confirmations will be all we need to join an uptrend continuation. So let's mark out these levels today. Our center of focus for the USTech100 today is basically between the 15,835 level and the 15,470, depending on where the direction of the breakout happens, will give us an insight into where price is likely going for today. So mark these levels out, mark out the trend line, and let's see how this will play out for today's trading session. If you have any questions, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. Okay, so I can see Nikki74. Good morning to you. All right. Good morning. Trust you're doing well. Okay, so in the absence of no questions, I will take this as a confirmation that we are all good to go this morning. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and we have an interesting situation going on in this market. We had a sell position triggered. In fact, I'm already out of that sell position after I moved my stop losses to secure the current position. So let's run through this quickly and see what is really going on in this particular market we're about to dissect. But first of all, it's clear that the GBP USD saw a very strong bearish momentum yesterday, leading to the breakdown of that support line of the ascending channel we identified on the higher time frame. Don't worry, for those of you who are joining us for the first time, we shall be deliberating on the higher time frame so you can see how things are looking like from an holistic perspective. Now, the expectations of a dovish Fed reserve decision has led to a decline in the U.S. Treasury bond yields, keeping the U.S. dollar to under pressure, which of course may likely be supporting the pound sterling during this week. However, it is important to note that the price action has broken down that ascending trend line, that is the support line of the ascending channel. So today we want to know if this breakdown is a false breakdown or a valid one to decide what our next line of action will be. Now, before we go into the details on the higher time frame to see what things are looking like, let's run through how the week started and what we saw on this chart that made us to sell the GBP USD. Now, the first thing we saw here yesterday was the fact that price action was sitting above this ascending trend line, which happens to be the support line of the ascending channel we identified on the higher time frame. Excuse me, please. And you know how we use our ascending trend lines in this community. As long as price remains above them, we look out for buying opportunities. Now, in addition to this ascending trend line, we saw the range. It was a very wide range due to the volatility that started the week, and we saw price confined within the 1.27250 level and the 1.26680 area to emphasize the level of uncertainty going on at the beginning of the week. Now, within that range, we saw this tight range here, which lines up with a bearish rectangle setup after considering this bearish momentum that led into this area. And in fact, during our live session yesterday, we noticed that price had already broken down the support line here to give us clues that price may drop to the downside and going on to break down the ascending trend line. So we spotted the below the 1.26680 level as an area to join a bearish move. And I did mention that if the sell momentum continues, then the breakdown of the 1.2618 will welcome more selling opportunities. So we had two positions triggered yesterday. The first one right here, dropping into this level about 60 pips, and the one that broke down this level dropped to about 15 pips thereabout before the bullish momentum came in. And in fact, I moved all my stop losses to that area below the 1.264 area, and I got stopped out about a couple of hours ago. And I do hope that everyone to move their stop losses accordingly, just like I usually preach here in this community. And if you have done so, you must have been taken out with a reasonable amount of profit on this one. So at this juncture, we do not have any positions running right now. So going into the New York session today, how do we intend to plan for the next potential move? Now let's run through the higher time frame. Let's see what is going on from an holistic perspective. Now remember, yesterday we acknowledged that price action has been bullish since the beginning of the month of November, and in fact we have an ascending channel to buttress the strength of the buyers in this particular market. So we had the support line marked out, we had the resistance line of that range marked out, and of course, in addition to that ascending channel, we had a couple of levels that we marked out here. As we saw, price action was confined within the 1.271 and the 1.262 area, which happens to be a strong support line in the last 2 weeks in this market. And we saw how it became difficult for sellers to break through that support line, which lines up with that ascending channel here, the support line of the ascending channel. Now that price action has broken down the ascending channel, that as you saw here with a bearish candle, as we saw the ascending trend line broken, now the question we want to be asking right now is, will the breakdown be a true breakdown or a false breakdown? Now, after the breakdown happened, we saw that immediately price got into the 1.262, and immediately price got into the 1.262. You can see what happened here. Multiple rejection. Sellers were unable to settle below the structure. In fact, about 4 to 5 hours ago, we saw this candle again closing in the form of an hammer candle. And from a technical standpoint, this is a sign that buyers are still very present around this area. And if you would ask me, I think that the breakdown of this ascending trend line is likely going to be resulting into a false breakdown due to the inability of sellers to find the strength or momentum to break through the 1.262 area. Now, if the 1.262 area continue to be a barrier for sellers, we will want to look out for reversal patterns on our lower time frame to capitalize on that uptrend continuation. And if we join an uptrend continuation from this area, we will be very mindful of this ascending trend line. So as soon as price gets into this ascending trend line, we ensure that we move all our stop losses, secure the buy position, and wait to see how the market would react to that trend line. Will it break out of the trend line to give us an opportunity to add more buy positions, as we will be back within the buyer's territory if price breaks out of the ascending trend line? Or will be buyers find a barrier around that area where sellers will take over, retest the structure to incite a downtrend scenario? So with the information we have gathered here, you would all agree with me that we are at a very crucial juncture in this market where it is important for us to see how the market participants are going to be reacting to the 1.26200 price level. Now, to have a better perspective into what is going on here, we will scale down into the 1 hour time frame, and right here on the 1 hour time frame we begin to see things more clearly. As you will see, our center of focus for today is going to be between the 1.264 area and the 1.26050 level, which happens to be the area where price action has been confined since the later part of the New York session yesterday. Now, if we look at the structure closely, it might result into a reversal pattern, as I can see here that the inability of sellers to break through this area could be a sign that buyers are gradually gaining momentum. And if it so happens that we have a reversal pattern, maybe in the form of a double bottom structure, as you will see price action appears to be gradually transitioning into something like that. And whenever we see this kind of transition, we want to be marking out the neckline that we will be using to validate this reversal pattern. So we have something at the 1.26400 area, the resistant line of this range. So if price action breaks out of this neckline, this will welcome some buying opportunities for us, and we want to be looking out for more opportunities if price action breaks back above the 1.2684, which if price breaks out of this level, we will be back above the ascending trend line and within the buyer's territory to add more buy positions to our existing trade. Now, I want us to also take note of this. If we join a bullish momentum at the breakout of the neckline at the 1.264, like I mentioned on the higher time frame, as soon as price gets close into this ascending trend line, move our stop losses and let's exercise patience to see how the market would react to the structure. As a breakout will welcome more buying opportunities, and continued selling pressure around that area may result into a retest of structure to incite a downtrend continuation. So that is my simple view on the GBP USD for today's trading session. So I do hope I made myself clear. Mark out these levels on your chart, as our center of focus for today is basically between the 1.264 and the 1.26050 area. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. All right, so in the absence of no questions, I only see comments here from Giovanni. Good morning. Benny1234, good morning to you. Hamad, good morning to you, Hamad. Atesmos, good morning to you too. Okay, so in the absence of no questions, I'll take this as a confirmation that we are good to go. We are all on the same page in that regard. Let's move on to the last and final asset on our watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And yesterday we had a phenomenal move to the downside, scooping over 1,000 pips. Is it up to 1,000 pips on this one? Is it 1,000 or 125 pips? Okay, I think 479 pips we have here from the first sell positions we took here. So let's run through what really happened yesterday and how we were able to capitalize on this bearish momentum. But before I go into the details here, let me quickly mention here the fundamental factors that are likely going to be driving, that has been driving the market sentiment, and what it will and its implications on the future of the trajectory of price action on the gold spots. Now, gold experienced a notable intraday reversal yesterday after hitting a new high at the 2,143 area. Remember, we saw this volatile move at the beginning of the week, breaking out of our key level at this $2,078 area. And in fact, this strong bearish momentum that dropped to the downside didn't get me at surprise, as it was expected that when price action finds a new high, we usually see the dominance of the emotions of fear set into the market, where majority who had bought this asset at a cheap price will at some point and out of fear want to be closing in some of their position to take off some profit from the market, with the hopes that price may crash to the downside. And this usually reflects on the charts in form of retracement moves, consolidation phases, and choppy situations, which is what has happened yesterday. And thank goodness we were able to position ourselves in such a way that we can capitalize on that move. Now, the retreat found some support actually around the $2,020 level amidst indication that the US interest rate may have peaked. And with this dovish Fed expectations and subdued US Treasury bond yields, the US dollar's rally faltered a little bit and potentially bolstering safe haven assets such as the gold. Now, the question going into today's trading session is, will price find some buying pressure to push price to the upside to gain some momentum upward, or are we going to be seeing some selling momentum continue to the downside? However, it is worth noting that the key players might prefer to wait on the sidelines at this juncture we are right now for the release of the key US macroeconomic feature, that is the ISM Services PMI, coming up later today, before making any aggressive bet in any particular direction. So as such, we will wait for a significant trading setup before making any fresh decisions. However, let's run through what happened yesterday, what led to the decisions we made. Now, at the beginning of yesterday's trading session, we noticed this range right here. Price was confined within the 2,143 and the $2,072 area. Now, during our live session yesterday, I did tell us that price action had already broken down our key level at the $2,078 area. Now, you know how we use our key level in this community. When price breaks down our key level, we want to be looking out for patterns and structures that supports the idea of selling that asset. Now, we saw the breakdown happen, and I told us all yesterday that if price will come back and retest the structure, and if sellers continue to negate every attempt by the buyers to break out of that level, we look out for selling opportunities. So we had a sell position trigger just right below the $2,078 area as we rode that momentum all the way into the $2020 level. Now, yesterday we acknowledged some levels here that we said we will be adding more positions to. We had a $2,050 level, which we said we had one more positions to, and I do hope we took advantage of this opportunity as well, as if you do, you will have maximized the potential of that bearish move. And well done, and kudos to everyone who had capitalized on this opportunity. Now, as it is right now, I do hope you've moved your stop losses accordingly, and I will be suggesting that anywhere around or above the $2,037.50 level seems most appropriate to lock in all positions at this juncture. Now, with a well-secured position, what is going to be our next line of action for today? Now, scaling up into the 4 hours time frame, let's refresh our memories as to what we saw around this area at the beginning of the week. Well, the first thing we saw at the beginning of the week was an ascending channel which further buttresses the strength of the buyers since the beginning of the month of November. And after connecting the series of higher lows and the series of higher highs, we have the resistance line and the support line of that channel, as you will see here. Now, something interesting happened during the course of last week as we saw price break out of the resistance line of that range, as you will see here, break out of structure, retest to inside that phenomenal move all the way to the upside yesterday. And in peculiarity with the nature of price action, when it finds a new high, we saw price crash back to the downside and in fact came back into this area between the 2030 and the 2020 area, give us some consolidation phase here. Now, the question that we want to be asking ourselves here is, will price action continue to the downside, or are we going to be seeing a reversal setup here, maybe a double bottom structure to incite the next wave of bullish momentum? So with the information we have here, we scale down into the 1 hour time frame to see how market participant will be reacting to this $2,030 level. Now, when we scale down into the lower time frame, this is what I was able to find out this morning. So this is the $2,030 level, which we just talked about now on the higher time frame. And this was what I saw here. And during the Asian session, you will see that price action was confined within the $2,037.50 and that $2,000.30 area. Now we saw multiple selling pressure here, showing us signs that buyers were finding it difficult to break through that area, which further emphasized the strength of the sellers around this level. So what I did this morning was to position myself just right below the support line of this range at the $2,030 area to capitalize on this bearish momentum. So I added one more position around this area, and it's currently running with about 43 pips in profit. Now if you are taking this one, well done to you. That's a beautiful high you got there for you to capital see this one. Well done to you. However, if you had missed out on this opportunity, don't worry, it's okay. Let's see how the market will react to the structure. We may likely see price do some retracement, maybe back into this area, and in fact it could even go to as far as the 2035 level. But the most important thing we want to see is that buyers are finding it difficult to even get above the 2037 area, and this would reflect on the chart as continuous selling pressure around this area. Then we can add more sell position or join if you had missed out on this particular one. And if price continues to drop to the downside, a breakdown of the 2018 will welcome more selling opportunities. So let's mark these levels out and let's be on standby to capitalize on this move. However, if sellers lose the momentum along the line and buyers begin to gain traction, how do we intend to join a bullish momentum here? Well, the first thing first is that the lowest point price action has been for this week is the 2020 area. In fact, I would rather want to use the 2020 level. So let's use the 2020 level first of all, because it's a major psychological area. And so let's use the 2020 level. So since price was unable to break down the structure, and we can see the second attempt by the sellers to break down that area. So let's see if it will truly break it down to the downside. If it doesn't, and instead we see a transition, that is price now goes into a higher low sort of a thing and results in back into this area, we might be seeing a reversal setup in the form of a double bottom structure where the breakout retest of the $2,037.50 level will welcome buying opportunities here. So if I am going to be buying the XAUUSD today, I want to be positioning myself above the $2,037.50 level to capitalize on the uptrend scenario, as a breakout of the $2,037.50 level would have transitioned into a double bottom structure where that level will be serving as the neckline of that structure to incite an uptrend continuation. So let's see how the market will play around this area, and trust me, if you're patient enough, you'll be part of this potential profitable journey. So we are still in the sell positions. We have three sell positions running at this point. I've advised us to move all our stop losses accordingly, secure the current sell position. Let's see how the market would react to the 2020, and if price does not get close to the 2020 and buy pressure resumes, then a breakout of the 2037 is what we are looking out for to join an uptrend continuation. So let's keep this in mind, mark this level out, and let's see how the market will react going forward. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off as always to see if there are any questions, while you also can use that time to mark out these levels on your chart. Yes, I see your comments. Good morning, Folakemi. Good morning, Atesmos. I see you again. Maxwell, good morning. Sarah Star, good morning to you. Sylvia, good morning to you too. All right, so in the absence of no questions, I'll take this as a confirmation that we are good to go this morning. And it's on this note I will be rounding off on today's trading session. It has been a wonderful moment with you guys. I enjoyed every single moment I have with you, and we were able to attend to four major assets today, which includes the US All Spot. We also attended to the USTech 100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple setups that we will be using to guide our decisions for today's trading session. And I do hope that we were able to mark out these levels on our chart, as we will be needing them to guide our trading decisions for today's trading session. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you will become at understanding how to use our analytical approach, which will eventually be make you to be able to use the information gathered here to make your own independent trading decisions. So it's on this note, I wish us all the best of luck, and always remember that you do want to have a well-defined risk management strategy that will be consistent with all your positions from your portfolio, to protect yourself to be able to trade another day. Remember that every decision we make in the financial market is more or less an educated guess, and not until price action hits your TP target can you say truly that you got the right decisions. So on this note, I wish us all the best of luck. I wish you a beautiful day as well, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for tomorrow's trading session. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.